So now we're going to go through chapter 17 problems. The first one, PR 171B, I'm actually going to get you started and then we will hop on over to a cost of production report. It is very important that we continue to master our journal entries and to see how the processes that we've learned actually align with that. And so this first example deals with journal entries. So we're talking about Preston and Grover Soap Company, and they manufacture powder detergent. Phosphate is placed in processing in the making department where it's turned into granulars. The output of making is transferred to the packing department where packaging is added at the beginning of the process. So on July 1st, they started with finished goods, 13.5, whip making, whip packing, and materials. And then the departmental accounts are maintained for factory overhead, which both have zero balances on July 1st. And below are the July summarizations of what occurred. A, B, C, D, E, F, G, H, I. And so now what they're asking us to do is for each letter to create the journal entries of what occurred. So let's go back up here. Purchase materials on account. So when we purchase materials, materials is an asset. Assets increase on the debit side, but then we owe money. When we owe money, it's accounts payable, and accounts payable increases on the credit side because it's a liability. So for the first one, it is materials and accounts payable, and our debit is 149,800 and then 149,800. So that's our first one. Let's see what's happening in B. So I'm actually looking in my book where I don't have to go back and forth. So if you want to look in your book, this is 17-1B. And so now the second transaction is we requisition materials for use. We requisition some direct materials for the making department, direct materials for the packing department, and then we had indirect materials for the making and for the packing. Now, when direct materials enter the process, they enter in as work in process. Remember that diagram we showed at the beginning. And indirect materials enter in by way of factory overhead. All right, so the first one, we have $105,700 that goes into the making department. So that's going to be our whip making. So it's entering in, and remember, whip is an asset, and when it increases on the debit side. Then we also have some materials going into the packing department. Whip, so that is 31,300. Next, we have indirect going into the making. When it goes into the making and it's indirect, it goes by way of factory overhead. Remember, indirect is always factory overhead. And then for the packing, we have 1,530. And then our total materials that were requisitioned out, when we add all of these numbers, 105,700, 31,300, 4980, 1530, we get a total of 143,510. And that's the second journal entry. Okay. You guys doing okay? All right. Letter C, labor. So the same thing. Direct labor goes into by way of whip, and indirect goes by way of factory overhead. So we got direct labor for making, we have for packing, and then for making indirect and for packing indirect. So let's get these numbers: 32,400, 49,800. I mean, no, what did I get? 49,800. 40,900. I'm sorry. 40,900. Indirect making 15,400. And then packing 18,300. And when somebody works, we owe them money. We owe them wages payable. It's a liability. And the total of those, adding that up, $107,000. D, depreciation charged on fixed assets. Now, depreciation is an indirect expense, and it goes in by way of absolutely factory overhead. So factory overhead making, factory overhead packing, and then when we have depreciation, it is offset by its contra asset account, which is accumulated depreciation. And that's something we learned from financial accounting. So let's see how much accum. So we have factory overhead 10,700, then we have 7,900, and then accumulated depreciation total is 18,600. Almost there. E, expired prepaid factory insurance. So when insurance expires, it is no longer an asset. So it decreases, but remember, this is for the factory, so it goes in by way of factory overhead. So you got more factory overhead making, more factory overhead packing, and then prepaid insurance has been expired. So let's see, we got 2,000. 1,500, and that's the total 3,500, right? I can do that one in my head. F, apply factory overhead. Now remember, when it's applied, it goes into work in process, but if it's applied, it is a credit. So we have applied making, and that's going to go into WIP. Applied packing, that's going to go into WIP. And then our factory overhead making, so when we know it's a credit, it is applied. So WIP, we put in 32,570 for making. I'm gonna go ahead and do that, 32,570. And then for packing, we applied 30,050. Again, keep in mind that when it's applied, it is a credit and it goes into work in process. Now we completed items and transferred them from making to packing. So packing is going to increase and making is going to decrease because we're moving it from making to packing. And so that is 166,790. And then the last one is, no, not last one, H, production cost transfer from packing to finished goods. So finished goods is going to increase, packing is going to decrease because it's just going from one inventory to the next. So our finished goods is 263,400. And then we have one more, my friends, and that is going from cost of goods sold. So it goes from finished goods to cost of goods sold. And we know cost of goods sold is an expense, and expenses increase on the credit debit side. And that, my friends, is your journal entry. So then you'll go and complete the balances of your inventory accounts, the balances of your overhead. So you just have to do your T accounts, put them on each side that they're supposed to be on, and you can get these balances. All righty. Now let's move over to the cost of production report. Fun, 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 right? We're talking about Bavarian chocolate. So Bavarian chocolate places their DM materials into the blending department. All materials are placed in at the beginning of the blending process. After the blending, it's transferred to the molding. So there are two departments, or blending and molding. The following is their working process for October 31st for the blending department. So on October 1st, their beginning whip was 2,300 units, and they were 3/5 completed. Then they had DM of 26,000 units, and here is the cost, 429,000. This is the balance. That's not the cost. The cost that was added in was this. And this is just our balance because our debits and credits. Direct labor had a debit of 100,560. Factory overhead here. Goods transferred was 25,700. But that doesn't tell us what was started and completed. That only tells us what was transferred. And so we need to know that amount. And then we don't know how many ending they have. We know it's 1/5 completed, but we don't know that amount. But guess what? We have enough to do what we need to do. All right, so the first section, how much do we need to charge to production? Well, beginning whip, it says up here, it's 2,300 units. So we plop that on in. We received 26,000 from the storeroom. And so now the units that we need to account for is 28,300, because it's this plus this plus this. Now we must break these two, into 3 buckets: beginning, started and completed, and ending. Notice this time they didn't give us the ending, but what do we have? Well, we know we got beginning whip. We don't know what was started and completed, but guess what we do know? How much was transferred out? It gave us this number. It gave us this number. So it gave us this number. And now, because we know how to calculate, we can calculate the missing numbers. This plus this has to equal this. We also know what this number has to equal, right? You're right, 28,300. So this plus this must equal this. So how do we get that? Mine comes up to 23,400. Then this plus this must equal this. This must be 2,600. So see, we will always have a way to get the information that we need. Okay. All right, now we must turn them into equivalent units. So it says that all of the items for DM was added at the beginning of the process. Well, if this was started in September, we have 0 that needs to be added for DM. Now, on October 1st, they were 3/5 completed. So 3/5 completed means that they were, I got to get my calculator, they were 60% completed. So how much more do we need to complete? We need to complete them 40%. So 2,300, I'm sorry, 2,300 times 40% is how many units? 920 units. So that's how you get that number. Now we said if we were started and completed in October, it's the same number across. Now, this plus this equals this. So we get these subtotals. And that's again, just this plus this equals this. Now we got to do for our ending WIP. All DM was added at the beginning. So that's 2,600. And then it says that for the ending, it was, I'm gonna go back up here to the top, 1/5 completed. So 20% completed. So 20% of this is going to be 520. Now we got to get this last number. This plus this equals this. And I have 26,000 for that. And this plus this equals this. And I have 24,840. So now we've completed steps 1 and step 2. Now we go down to step 3. This is a little better. Cost per equivalent unit. So we got to first see how much DM was added for October. We go get these costs from up here. It says 429. So we go down here, put the 429. I'm gonna go back up and get the conversion. Remember, conversion is DL plus factory overhead. So that's 149,040. So you have to add both of those. Now to get the per unit, I just take the cost and I divide it by the equivalent units, which we calculated up here. So for this one, it's 26,000 for DM. And then for conversion, it's 24,840. And then once we calculate that, it would be nice if this will auto-calculate for us, wouldn't it? This divided by this, that gives me $16.50. This divided by this gives me $6. So that's all you have to do for section 3. It's just pulling the numbers from the information you have. And we are almost there, my friends, almost there. All right, now we got to look at the cost that we must assign. Well, the beginning WIP had cost of this amount. So we got to pull that down. And that just comes from your information. Then the cost incurred from October is DM plus DL plus FO. So these two added together gives 578,040. And the total cost that we got to account for is 624,408. And if you go up here, what did that say? I'm telling you, look, accounting is amazing. And the last thing is to break them out into our buckets. So beginning WIP just comes on down. To complete inventory and process, remember there's no DM because that's 0, right? But for conversion, it's 920 units. So we take 920 units times the rate, and we get 5520. So to complete beginning WIP is 5520. And then we add this plus this to to tell us what this number is. Lots of adding. Now started and completed. What is that number? So we go up here, started and completed was 23,400. We multiply times 1650 for DM. For conversion, it was 23,400. We multiply times 6 and we get our amount. So I'm adding these up. So for DM, it was 386,100. For conversion, it was 140,400. And then we always add these two up. And that gave us 526,500. And now this plus this, and we can tell this line, that's why we know we got to add, is 578,388. Now, this is the amount that we're going to use for our journal entry. We did all of this to use for our journal entry. Okay. Last component, ending with 26 times 1650 for DM, 520 plus 6 times 6 for conversion. And let's see what we got. Here we get 42900. Here we get 3120. The total of these two, 46020. This plus this equals 624,408. And this equals this. And so we've accounted for all of our costs. Now, it asks us the change in direct material cost per equivalent unit. Did it increase or decrease? Well, we got it for the current period. We got to calculate it for the previous period. So let's go up here. If DM, our total of units, so let's see, so 23, let's see. So it says that assuming that October 1st work in process includes DM of 38,295. So remember, the total cost is 36,368, but DM is 38,295. So how much is there per unit? So I'm gonna go over to Excel so we can calculate it. So if it is 38,295 and there were 2,300 units, that's 1,665 per unit. Now, how much for conversion? Well, if our total amount was 46368. Okay, so 4 equals 46368 minus of that 38295 was DM. So that means the conversion cost had to be 8,073. Okay. However, the conversion cost for those units, so we would say 873 divided by the number of units, which was 2,300. But those units were only completed 3/5. So what we have to do is say that divided by, so let me do 2,300 times 0.6. Well, actually 0.4, so equals 2,300 times 0.4 times 0.4. So if they were 3/5 equals 2,300 times 0.6, 1,380. You take the conversion divided by the units, and that gives you $5.85 for conversion. So you have to calculate what the per unit rate is. Now we go back here. If this period was 1650, last period it was 1665, that means that it has decreased by how much? You're right, 15 cents. Now conversion, it's six this, last it was 5.85, so it's increased by 15 cents. So they did a trade-off. And so this is what you will want to research. So let's check our work. And there you have it, my friends. Happy studying.